Amisha Vora also joining us this afternoon. Amisha, it looks like the government's gearing up to address all kinds of concerns in the budget, but there is a segment of the market that's still worried it might be a bit of a damp squib. Are you already sensing some kind of a factoring in of what may or may not happen in the budget with respect to sentiment right now?
So my take is slightly different in the sense that what we were facing post ILFS and particularly post Jet Airways debacle and series of some such debacles after that is a complete confidence crisis and to a great extent trust deficit is what we say. So, whatever is the outcome, most of us, we know that we have constraint in terms of we have a stop at fiscal deficit X number and our revenue generation capability as a central government is Y. So we have to match something in between. But these one-on-one meetings with industrialists, I think is happening in the 6th year of governance, and it will definitely boost confidence. And industry, when whatever decisions they take, they always take a risk. And to judge it with the eye, always of a doubt, was creating, I think, a lot of problems. I think this will be a big confidence booster, the effort which is happening. And of course, it will increase the overall understanding of the government in terms of some of the things which will really work for the economy. And it seems like a very sincere effort, and if it is in the right direction, I think, of course 2 quarters, 3 quarters it may take, but we can see things progressing in the right direction. Apart from that, of course, the monsoon has been reasonably good. So next year, even if monsoon is not so good, the water beds are really high. Some amount of rural economy, which was hugely slowing down, is coming back with slightly better crop prices. So rest of the things will also fall in place, which is in the normal cycle. Commodity prices post US-China trade war has been bouncing back. So, slightly rising commodity pricing trend is also very beneficial for a growth economy like us.
Okay. Right. Amisha, firstly wishing you a very happy 2020 from all of us here.
Wish you, the entire team, and of course the audience, a very happy 2020. It's the beginning of the year as well as decade, and with a lot of expectation, we all are looking forward to it.
Yeah, absolutely. And Amisha, one such big event that we always look forward to year after year is the budget, less than a month away. What do you think the market expects really going into this big event, which you just highlighted about as well, of course, but just in terms of, some of the individual sectors, because at least with this government, one has seen that it's not just the budget, but a lot of announcements which have happened outside of it. Just on 31st Eve, you had the finance minister announce that infrastructure pipeline. We've heard time and again that there is a big revival and announcement coming in for the housing sector per se. We've already seen the kind of IBC amendments which have come in for NBFCs and the health of the financial sector at large. Any such announcements which you think are very, very critical at this juncture and would be appreciated by the market too?
I think two important things which can help revive both the consumption, the demand side, and take us back to a virtuous cycle of spending and capex. One of them, of course, is more money in the hands of consumer. What we did last year post-budget is we gave more money in the hands of corporates, thinking that they will spend more and they will incur capex. But my belief is when the capacity utilizations are so behind the curve, and whatever slowdown, impact, etc. is, the capex will not revive with that. So now we need to muster courage and probably give more money in the hands of the average people. So the personal tax rationalization, but beyond that, I think that it's not only the affordable housing which needs a push, it's the normal housing which needs a push. And there, if we come out with something really radical in terms of, say, the whole investments in a house for a period of 1 year, if we do, becomes completely tax-free. Something very radical which pushes our normal real estate back. Because most of the economies, including US, bounced back with their housing construction and real estate reviving. And those who have money do not have desire or still feel uncertain, that needs to be tackled rather than building something new only for affordable, which of course needs to be done. So I think these two can really help with limited resources also to help consumption come back, and capex will be a natural cycle which will follow once you have, you know, reasonable interest rate and high capacity utilization.
Amisha, with this current spike that one is seeing in crude, although it's, you know, only a knee-jerk reaction, who knows how long this is going to really last, but it seems like it's a bit of a geopolitical tension, scary kind of situation that is building up in the Middle East with the US strike now on their Iranian military leader. But do you think it could also have a bearing on the way OMCs back home actually perform? Again, we're seeing some pressure on BPCL, and would that then have repercussions on the BPCL divestment process? Could it get delayed beyond the financial year?
I would think these are slightly too not exactly connected. A, of course, because of geopolitical reasons and India being a very large importer, we will be one of the most impacted country both ways, for higher import bill, for maybe rupee getting impacted if some of these things last longer than just a knee-jerk reaction. But coming back to BPCL, I think the timeline itself for such a large divestment is so tight. And when you announce a timeline for sale, always you don't get the right price. So I don't know whether, irrespective of whatever happened, geopolitical event, was the strategy to divest in this way was right. Strategy to divest was a very, pragmatic decision, very bold decision, because it's a very pricey asset that we are putting on sale. We are completely ready to divest. But in case, imagine in such a short timeline, we don't get the right response from global, large, private players, and it goes back to one of the PSUs, it will be a complete damn squib, and it will just spoil the whole mood. So it's one event which we all would like to wait and watch, but I do feel that the timeline has been very, very tight.
Amisha, we've had, quite a move when it comes to steel this week, cement, some of these pockets of the market. Are you also bullish on this trend continuing from here on?
So I think for steel, mostly it was global prices which formed up, and which is what is leading to a domestic price rise. 1,000 rupees price rise happened, and we are hearing another 1,500 rupees price rise coming in. But I think that, something like in this commodity companies where you take any listed large three players, their debt to EBITDA is reasonably very high. So another 10% kind of a move is still possible, not impossible. But then I think that the underlying strength either side, globally or domestically, is not so strong that steel prices will climb another 20-30%. And accordingly, I feel another 10% kind of a move is still possible, but not on a very strong wicket I would recommend, because most of the stocks have gone up by 30-40% from the bottom in last 2 months, if I'm not mistaken.
All right, so that's on some of those names as well. What about IT? Where do you stand on IT?
Very selective. I would say last year, as a December 19, most of the IT index underperformed the Nifty. I'm sure Nifty had a very skewed performance because of some of the heavyweights. And this year also, I feel that except few good names, or few select names where some strategy is working, the overall growth will be lower than last year because of the global outlook, be it on retail or BFSI. So I would say that I will be underweight on portfolio on IT. Not that I will not keep, but we will be underweight. Some of the names we like as a house continues to be Infi, HCL Tech, and L&T Infotech.
Thanks for joining us this afternoon, Amisha.